بسم الله الرحمن الرحيم نحمده ونصلي على رسوله الكريم أما بعد. My respected brothers and elders in Islam, mothers, sisters who are listening, Alhamdulillah, we have gathered here today for this program of inheritance and wills. And I think before we commence, it's only right that I express my gratitude to Rashid Bhai for taking out his time and coming here in order to present this very important program. And at the same time, I'd like to express my gratitude towards yourselves for coming, taking out your time and attending the program. Inshallah, Allah makes it beneficial for each and every one of us. I think the whole Friday khutbah this week I dedicated on this issue of inheritance and wills. And the whole reason why I did that was to put forward why or how important it is as Muslims living in this country that we do have a will prepared in our lifetimes. As it is our Islamic responsibility, more in this country than anyone else or anywhere else. If we were living in Muslim countries where Muslim or Islamic law prevailed, then maybe it may not be that important for those who are not going to make a wasiyat or make a bequest for wealth to go to charitable causes or elsewhere. Because where those automatic inheritors are concerned, for example, children automatically inherit from the father or parents, parents automatically inherit from the children, wife automatically inherits from the husband, husband automatically inherits from the wife. So this sort of, these shares that have been determined by Allah Almighty in the Holy Quran and our beloved Nabi alayhi salatu wasalam through his sunnah, they would automatically be implemented where in a country Islamic law prevails. But we are living in a country where Islamic law is not upheld, and hence the reason why in our wills it's necessary to we put down all those people who automatically inherit. Dying or departing from this world without a will has many harms as far as we are concerned, and I think Rashid Bhai will go through that. But as Muslims, the instructions that has been left by our Nabi alayhi salatu wasalam, numerous narrations exist where it says that it is not proper for a Muslim who has something to bequeath, that he remains 2 nights. In some narrations it says 3 nights where he has not prepared a will. Hazrat Abdullah ibn Umar radiyallahu ta'ala anhuma, where there is a narration there regarding these 3 nights, he mentions that since the time that I heard this instruction from Rasulullah sallallahu alaihi wasallam, I haven't spent a single night where I was without a will. So through which we understand that at all times, if we have something, and if we have property, if we have wealth, if we have cars or whatever, as I said, however small it may be, it goes into the inheritance pot. So however small it may be what we have, then that needs to be written down. If you don't write it down, the result could be devastating for the families or the children that we leave behind. As I said on Friday, that many a times that maybe in a family where the son who has the control over the family wealth, sometimes he takes over everything and does not give anything to anybody else. Or sometimes where the wife passes away, husband has the control over everything, he will not give anything to the wife's relatives or whoever her inheritors were. And the reason why this happens is because there's no will. So that's through that we understand how important it is. Cheating in will or being dishonest, as I mentioned on Friday, is actually making one's place or throwing oneself in the fire. One may in this world be very prompt and regular as far as ibadat are concerned, salah, saum, zakat, everything is in order. But when it came to mirath, when it came to the distributing of the inheritance, then that person was negligent. And he didn't give the shares that should have been given. As a result, man farra min mirath warithihi qata Allahu mirathahu min al-jannati yawm al-qiyamah. Rasulullah sallallahu alaihi wasallam has warned that a person who cheats in matters of inheritance, Allah subhanahu wa ta'ala will throw him into the fire on the day of Qiyamah. So that's that's how important this particular issue is. And I think it's important that we also understand, I mentioned this point on Friday, that during one's lifetime, I am alive at this moment, my house belongs to me, my car belongs to me, whatever wealth that I have or whatever accounts that I hold and the monies that are there, that's mine. But as soon as his eyes close, for good in this world, and I depart for the next world, at that particular time, my ownership to the wealth that I had in the world no longer remains, it expires. It's not mine. It's not mine anymore. It automatically transfers in accordance to the shares that have been determined by the ultimate owner, meaning Allah Almighty. So whatever Allah has decided in the Holy Quran, or what is mentioned by Rasulullah Sallallahu Alaihi Wasallam in the Sunnah, it is that will take the precedence. And this is the reason why it's important to know as well, those people who are administrators of the wills, Muslim, that if a person passes away and the will that was written is not in accordance with the sacred laws of the Holy Sharia, then that inheritance will not be distributed in accordance with that will. It will be distributed, Islamic law will prevail, and it must be distributed in accordance with what Allah Almighty has determined. Otherwise we will fall under as people who are sinning as well. So it's important in our lifetimes we make a will, and that's the whole reason why we brought Rashid Bhai here. I think recently someone passed away, I know, Bhai Sajid also knows, person passed away 50, 60 years old maybe only, and no wife, no children, but parents are there, brothers are there, whoever, but there's no will. And what tends to happen is, if there's no will, then it will be the law of the land that will take the precedence, and that money will be distributed according to that. And money will be seized. Just imagine that if we were to pass away, we had children, all the money was in my name, and I left no will, there's no power of attorney, nothing. My bank accounts are seized, they're frozen, until everything is cleared. What will happen to our children, my children, how will they live? That's how important this issue is. Then there's the issue of inheritance tax. That if we die without a will and proper advice, it could be that we pay a lot more in inheritance tax. And remember, inheritance tax is not something small. For every 100,000 that a person leaves, 40,000 will go for tax. And that bill will come, I think, within 6 months. After that, every month that we don't pay, there will be interest added on. So that's why, how important this issue is. Inshallah, you will listen to Rashid Bhai carefully. He will go through the issue of wills and inheritance and the inheritance tax, etc., according to the law of the land, where the Islamic perspective of inheritance is concerned. Alhamdulillah, you should approach your ulama and experts in this issue. And when you make your will, then you make sure that you have made mashwara with the ulama as well, that is this what I've done, is that correct or not? And I think I'll leave it at that, and I'll pass on to Rashid Bhai, inshallah. Jazakumullahu khair.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم بسم الله والحمد لله والصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Jazakallah Maulana for the highlighting the issue on the will and inheritance tax. I'll elaborate more. Alhamdulillah. I'll try and make my presentation as simple as possible and as clear as possible, so hopefully, inshallah, that everybody can understand. If there are issues that you do not understand, then please see me afterward, or you'll have my contact details at the end, so you can always call me. I believe my daughter and my granddaughters are attending the session at the sister side, so if they can make themselves known, and so if the sister has any issues or they want to ask anything, perhaps they can approach my daughter and she can take the contact detail, and I'll be happy to respond to that. So that's yep. First of all, can we now start the thing? Before I start my presentations and tell you more about the will, go into the topics of today, I just want to do some facts and reality check and just let you know some of the facts that you probably, it will matter when you make wills, and it may affect you when you make wills. Okay? So just basic facts. First of all, can I ask you to show of hand who has will at the moment? There you are. Very few people, out of about 10, I think. I'm not so surprised. Okay. The reason is, in the UK, 1 in 2, 50% adults do not have will. That is the fact. And that's the research that's been done by Canada Life just recently. So 1 in 2 people do not have will at all. Now, just going back to Labour manifestos during election time, they made a pledge. The pledge was that they will not raise the income tax level, national insurance level, or VAT. But they never said anything about the inheritance tax. They never said anything about capital gain tax. Okay. So, and then they're now saying that the Tory government has left a big black hole, 22 billion, and they want to fill that. And how will they fill that hole? You see, they're not going to raise it through income tax. They're not going to raise through national insurance or the VAT. So they've got to find a way to fill that hole. So you just need to look out for the forthcoming budget. And taxes are likely to increase. The very first tax that they're going to increase is the inheritance tax, what we call the nil rate ban. It's likely to be lower, so the government can claim the tax through inheritance tax. Now, at the moment, and it's £325,000 per person. I'll come on to those later on, but just let's look at the figure, which is £325,000, which is the nil rate ban, which is given to each individual. Okay. So what they'll do, they're probably going to lower that. They might go down to 300. They might go down to 275. We don't know. So let's see what happens in the budget. The additional threshold, which is again, which people can claim, which we call the resident nil rate ban, that was introduced by the government, Tory government, in 2017. It's currently frozen to 175,000 up until 2028. Now, during the COVID, that was supposed to increase. They haven't increased it because during COVID, the government actually gave out a lot of money, furlough and benefits and others, and they want to cover that. They wanted to cover the money they gave out. So what they decided to freeze the nil rate ban and the resident nil rate ban, so they can claim the tax as much as they can. And that's what they've done, okay? And just basically, and I was going to ask a question. Do you know how much they raise? The government raised as a revenue through inheritance tax, and you'll be surprised to see that. Just in 2022-23 tax year, the receipt was 7.1 billion. That's what the government has collected through inheritance tax. Now you can see why the government want to increase that. You see, this is a hidden tax, which they call the death tax, which people don't feel, because it's, you do not pay that. It's paid on your death, on your state. So government will try to increase as much as they can. Now, in 22-23, that was increased by 1 billion. That's because the houses price went up. Because the houses price went up, people's wealth went up. They were able to collect more inheritance tax. Now, the other thing is the capital gain tax, which obviously could affect some of you, may not affect all of you, but that is going to be likely to be increased in the budget, because this is another way that the government could claim as much tax as they can. Now, let me just show you the table here. It's the tax. If you're a tax at the moment, the current capital gain tax for the basic rate of taxpayer, which obviously a person paying tax up to 50,271 from 12,571. The capital gain tax, not residential gain. Now, let me qualify this by saying residential property gain. This is not on your property that you live. There is no capital gain tax to pay on the property that you live and you sell and you dispose. There's no capital gain tax on it, yeah? But if you own a property which is your second home, investment property, buy-to-let property, okay, then you will have to pay capital gain tax on the gains that you make on that property. So if you're a basic rate of taxpayer, the capital gain tax at the moment is on a residential property on a buy-to-let. If you sell, is 18%, and other assets, shares or whatever you've got, if you sell those, is 10%. Okay, and if you're a higher rate of taxpayer, then it goes up to 24%, and other again is 20%. And the fact is this: if you dispose of property, which is your investment property, okay, then you must pay capital gain tax within 16 days of disposal. Otherwise, the interest will start to incur. So, this other way that council might, the government would look at to raise the tax, to raise the revenue, is obviously through the council tax, and they might look at the way that local authorities currently, how they process. So that's up to the local authority. But I think there could be changes there. But also there's a fuel tax that the government will look at, and they're also looking at, well, they were going to look at the freezing or they're going to take away the fuel energy. But I think let's see what happened on Tuesday. And if they keep that, then they obviously mean that they need to cover that. And where will they go for? Capital gain tax, inheritance tax. Okay. So there you are. So today's topic is basically what we're going to discuss today, and I hopefully that I'll be able to take you through in a most simple way. If you don't understand, then please at the end come and see me, and I'll be quite happy to explain. Right, first of all, it's the general info on making will and consideration. That's one of the items. It's what you need to consider when you make will. Owning property and the type of ownership, because the main asset that people have is the home. That's the main asset. And sometimes it's the only assets that people have is the home. Okay? So how you own the property is quite important. When you make a will, you have to really take that into consideration. And we'll also look at inheritance tax and eligible allowances with some examples. Okay, so we'll look at basic example so that all of you can understand how it works out. Okay. And Maulana has already mentioned Sharia wills, and I'll try and cover a bit on it, but I'm not going to go into depth because I'm not a alim ulama to explain more on Sharia wills. But if there are issues that you want to know more on Sharia wills, then obviously I'll encourage that you seek advice of ulama, muftis, or any scholar. But I'll try and cover as much as I can. And last but not least, I'm not going to go into much detail, but just to give you an overview of lasting power of attorney. When we talk about a will, we discuss will, but we never ever thought about making power of attorney. It's very vital, very important, you see, and people don't tend to do that. And when the time comes, people regret it. So we'll cover a bit of power of attorney. And power of attorney, it's only during your lifetime. It can only be used while you're alive and not after your death. So let's look at the points that you should consider when you're making your will. Okay. First of all, is why do you want to make a will? What is the purpose you want to make a will? Is it to ensure that your estate, your assets, go to your chosen beneficiaries? Is it to maximize your tax savings, try and save much tax as you can, inheritance tax? Or is it because you want to protect your share of the estate and you want to make sure it go to your children or chosen beneficiaries if one of the spouses remarries? It's quite important to understand, because if somebody passes away, husband passes away, wife passes away, husband has right to remarry. If he wants to remarry, then the estate assets might go to the new wife, and the first wife probably didn't want that, because she might say, "Look, I worked so hard in my life, and my rightful estate should go to my children." So that could be another reason why you want to make a will. And you may want to protect your you might want to protect your share, your assets from KERFI. And I'll give you a bit more on KERFI later on. So just at the moment, we're just going to say to protect KERFI, because these days it's KERFI that if you happen to receive care out of NHS, the social care, the adult care, then obviously you'll have to pay for it. It's mean tested, and we'll come on to it later on. As Maulana mentioned, that if you do not have a will, or you haven't made a will, then your asset will pass according to the law of intestacy, okay? Which means you died without a will. So here, it's the government that has to decide who is the rightful beneficiaries, you know? And they may have to sort of do a, search. They often have to advertise in what we call London Gazette to find out if there are any eligible beneficiaries. Now, you might say that, it's your children, but if you look at it, sometimes people has children which are illegitimate children. I'm talking about here non-Muslims, yeah? Okay, and they are rightful to claim, and that person who's passed away might have hidden the children away from other people, from his wife or whatever. And for that particular reason, it is a requirement for them to advertise in the London Gazette to see if there are any rightful beneficiaries who has a right to make a claim on that estate. And therefore, if you die without a will, that could happen. You see, it's important. The government has to see who are the eligible beneficiaries and who's entitled to it. Okay. And when you make a will, you need to make sure that it meets your precise need. It's quite important. So understand why you're making a will and making sure that it does meet your needs. Now, often people make homemade will, and I get this quite often. Okay, homemade will, fine, not a problem, but there are some issues that affects. Okay, it may be it's not written properly. Okay, that's one issue. The grammars are not there. Mistakes are made, and sometimes the people get their own beneficiaries who's going to be benefiting from the will to be witness. Now, if the beneficiaries are the witness to the will, they are not eligible. The will is not valid. Okay? So you have to have an independent witness. Now, if you make a will at home, you think it's fine. You've written it. There's grammar mistakes there, which could, a one letter, one word could change the meaning of the will. You see? And then you'll probably get your wife or your daughter or your son to witness it. That will is not valid. Or at least the beneficiaries of that will not get anything. Okay? So that's something else that we've got to look at. And also, you've got to make sure that the will, you create doesn't confuse the probate office. So, if you make a will, if you make homemade will yourself, it's got to pass through the probate. There are no confusion to them. There are no question that they need to ask. It must be clear. So it's quite important that is there. Otherwise, the will might not consider to be valid. And it must be clearly written. So it's other thing that you need to do to make sure the wills are properly written and there are no mistakes there at all. Your executors, trustees should understand the will that you make. So it must be clear, so they understand, they know what's written in there, and they're able to sort of execute your process your will as quickly as possible without any issues. And it must make sure that it doesn't get too complicated for the probate court to understand. And it needs to minimize complication for the beneficiary so they can inherit the share quickly. So, they you want to make sure that your shares are, your estate is distributed as quickly as possible. But to do that, the will must not be too complicated for your beneficiaries or executors to understand. Now, when you make a will, you have to appoint what we call the executors or the trustees. That's a legal requirement. You cannot make a will without appointing your executors or trustees in a will. Now, there is no legal reason for you to appoint a professional, a solicitor or accountant to be a trustee if you will. You can if you wish to. That's not an issue. That's not a problem. By all means, you can do that. But it is not a legal requirement. You can appoint anybody that you want to appoint. But you might want to appoint a professional people as a trustee. If a trust is likely to arise from your state, there's going to be a number of trusts. Usually, let's say that you're a very wealthy person and you've made a lot of trusts, and you want to make sure that the trusts are managed well, properly after your death. Then you might want to appoint your accountant or lawyer to act for you as a trustee on that will. Now, the executors can be your spouse, your children, or anyone over the mature age with a good mental capacity, and they can act as an executor trustee. So it's not an issue, not a problem. There's no conflict of interest for your children or your wife to be the executor or to the trustees of your will. Okay? So the prime beneficiary can act as an executor or as a trustee. Now, if you're managing a charity, and you're on board of a charity, a trustee, you're on board of a trustee, then that, as a trustee, you can't, you should not benefit from the services of that charity or gaining any monetary benefits from that. Yeah, if you are gaining any benefits or any financial gain from that charity, then there is a legal requirement for you to register your interest. You have to declare your interest, conflict of interest, and you have to declare that in the register. You may have to report that to the charity commissions. Here, this particular trustee is your wife or your children, doesn't have to do that. There is no requirement. They can act for you as your trustee. This is quite often overlooked. People don't think about it, but it is vital for the will, important. If you have children under the age of minor age, then you must appoint guardian in your will. It's highly recommended. Now, I'll give you just a recent example that I'm actually facing at the moment. I have a client in Finsbury Park, Crouch End area, non-Muslim. She has a daughter who is a single parent. She worked in a hospital at Whittington, and while on duty, she collapsed. And she was taken into ICU, and she was taken into the care. She was in coma for about 3 months. Okay? She's currently having a rehab at Homerton. Now, her children was looked after by her grandparent. Now, this is a life scenario while the person is still alive. You know what happened? 28 days passed, and the social service stepped in. And they wanted to make sure the grandparents are fit for people to care for the grandchildren. So they did what they call the fitness test. You see? And having done that, they've recently come back again to check again. So basically what I'm trying to say here, this is a life scenario when a person still alive in coma who cannot look after her children, okay? And the children are being cared by the grandparents, but the social services have stepped in. So what I'm trying to point here is that if you have minor child, then please, appoint guardian in your will for that child. Avoid that child being taken away from the family and going into foster care. So, a very important issue to consider in a will. Guardian must be the mature age, and has a good health and has a mental capacity to look after that child. So you've got to choose that person who is fit enough to act as a guardian. And the guardian must be a trustworthy person you can depend on to look after your children, just as you would look after your children during your lifetime. Okay? And a guardian must be informed, so they must be happy to act or accept the role. You can't just name the guardian but not telling them. They have to accept it. Otherwise, when the time comes, they might decline. So, very important. Okay? And obviously, the other thing is that if you appoint a guardian, then obviously, the guardian will probably come on the second death, not on the first death. So, when both husband and wife passes away, that's when the guardian role will come up. Okay? And for that guardian to look after that child, obviously, it's going to cost. So, you may want to consider leaving some money, okay, for that care, for that child, for the guardian to look after. And, you can restrict what you want to give. If you want to do that, then you set up a trust, so that the trustees will then pay the guardian what they think is right and correct, okay? This is the other thing I want to stress. A disabled child, if you have a disabled child, you have to look after that child. You want to make sure that child is being cared for after your death. And therefore, you may need a disabled child trust to make sure that adequate funds are available for that child in future. And when we make a will, we tend to overlook all these issues. It's important that we consider those issues very carefully. Now, as I said, the main assets that people have.
Presentation, can we put that on the WhatsApp group afterwards? A lot of people taking pictures. We can just
Later on, yeah.
we can do that.
Yeah.
Okay.
Yeah. I think I've just been told that Brother Iqbal will put this on the WhatsApp group. On the website later on. Yeah. Now, as I mentioned earlier on, the main asset that people have is the home. It's the home that they, that's probably the asset or only asset that people have in their lifetime. Are they lucky enough to have other properties? But usually it's just the property. So, how you hold your property is quite important, and how it will pass on to your beneficiaries on your death is quite important issue to look at. Okay, so the ownership of the property is something that we need to look at. And there are two types of ownerships, okay? And I'll go through in the presentation. One is what we call the joint tenant. That I'll show you on the next slide, okay? Or beneficial joint tenant. Joint tenant is one of the ownership. And the other ownership is what we call tenant in common. It still is a joint ownership, but it has a share, okay? I'll come on to it in a minute. More on that. So joint tenant is basically your share will pass to surviving spouse automatically and cannot pass by a will. So you don't really need to have a will to pass your property if you own jointly between husband and wife. Okay? Or the joint tenant could be brother and daughter, or father and son. It doesn't have to be husband and wife. Okay? So what happens if you have a property which is jointly owned, okay, on death, the surviving spouse will benefit from that property. It will transfer without even having a will. And this is another ownership, which is tenant in common. So if you wish to pass your interest, your share of the property, okay, to your children or to anybody else, you should hold your property as tenant in common. You do not have to, then your share of the property, whatever share that you hold, 50%, 40%, or whatever you hold, then that share will go to your chosen beneficiaries through your will. Okay? So this is joint tenants, where you can see the house, and the whole house there is between, at 100% is owned between husband and wife together. Okay? And if husband passes away, which obviously you probably see on that there, then everything goes to wife. And if wife passes away, everything goes to husband. So that's a joint ownership. And most of the ownership that people have is joint tenancy like this. Okay? So it doesn't pass through the will. Even if you have a will, it doesn't matter. And if you hold a joint tenancy between two brothers, it will go to whoever survives. This is the other part which I mentioned earlier on, tenancy in common, which is obviously separate shares in the property. Okay, so there is no right of ownership on death. Okay, it has to go through the will. So an example here, that husband can owe 50%, the wife owes 50%. Okay, and if you look on the left side here, where it says husband dies, deceased, so husband 50%, and that 50% of that share that the husband held will go to husband chosen beneficiaries. Now that could be his wife if he wants to, children, grandchildren, okay, whoever he wants to give to. So that will go to the chosen beneficiaries. And the wife will then continue to live in that property, and she will own that 50%. Now the question is, the wife's going to live in that property until she dies, or until she moves out, or until she voluntarily sells the property or downsizes. Okay, what happens? The beneficiary might say, look, now, we own that house, half of it, therefore you own a rent to us. That, they may demand a sale. We don't know. Okay? So to protect that, obviously then you have to make a trust, or you have to make in a will to have a right to occupy for that surviving spouse to continue to live in that share, on that property until such time she voluntarily moves out or she decides to sell, or a condition could be if she remarries, then the house will be sold. Okay? So she has right to stay in that property. So what we call a right to occupy, we create a trust. So the children can't demand or tell the mother, sell, we want the house. Okay? So property, again, tenant in common, as a tenant in common, you are free to dispose of your shares via your will and to whom you wish. So you can give your share to whoever you want to through the will. That's if your property is tenant in common. To hold the property in tenant in common, so if you hold the property as jointly together, as a joint tenant, then obviously you need to inform the land registry to sever the tenancy. So, and you do what we call a mutual notice of severance. So you have to sever a notice between husband and wife to say that you now decided to sever the tenancy and you wish to have property as a joint tenant, so that each of you can direct your share of the property to who you want to through your will. It has other benefits, okay, tenant in common. It's protecting your share of the estate should your spouse remarry. I just briefly discussed that with you. So, if you pass away and your spouse remarries, so the 50% of the share that you have will go to your beneficiaries, and it will be protected. Okay? It will not go to the new spouse. It can help to protect your interest in the property if you or your spouse go into full-time residential care. I want you to understand this, because government are having to fork out quite a substantial amount of money to look after people who needs care, adult care, okay? Now, they obviously want to try and make sure that, the wealthy people who has wealth, a big asset, should self-fund their assets. So there's a mean test, okay? And the mean test is probably is this: if you have more than £100,000, then they'll charge you for the care. And I think the cap they have now at the moment is £85,000. So the first £85,000. Once you reach that, then they stop charging. But anyway, they'll charge. If you own the property as a joint property, in other words, owning property together as 100%, which is the first one that we mentioned in the diagram, then to cover that care, the social services has the right to put a charge on that property, because it's been tested. You have an asset which is worth more than £100,000. Your value of the house is more than £100,000. Okay? So the social services has the right to put a charge on that property. So if it's 100% owned, they can put a charge on that property. But if you own a property which is now split, and you owe 50% and the husband owns 50%, they cannot put the charge on the whole of the property, because you only owe 50% of the property. You see, so your 50% of the share is protected, or the whole may be protected, because they have to seek consent from the other person. Okay, so I'm just saying it could save your, paying for the care. But anyway, that's an issue that you may get away with it. So this is just I just downloaded this morning, really, and I don't want to go on to it. I don't want to. This is from, you can just look at this on the .gov.uk, okay, website, adult social care costs. And it's basically to say above the upper limit, 100,000, that's the limit that was there, 100,000, okay? The full cost, you will have to pay full cost. You are self-funded. So any care that you receive, you will have to pay for it. And that's not me. This is the government website. This is there. And I won't go into more on that, but I'm just basically saying that they'll charge for the care. Okay, so if you have your property held as a tenant in common, there's possibility of saving some of it or most of it. Anyway. The other thing that you need to give some consideration when you're making a will, okay, it's quite important. People tend to overlook this. A specific gift. Decide if you wish to leave any of your member anything, gift, jewelry, watches, whatever. Then you can do that in your will. you'll have to obviously describe what the gift is. Pecuniary legacies. Now, this is the terms of gift of money, that you may want to give money to a masjid or a charity or a friend, okay, or anybody else that you know of, okay? You can do that in a will. And I'll come on later on in a minute, any money that you give to a registered charity, and if a mosque is a registered charity, any money, any legacy you give to charity is inheritance tax-free. There's no inheritance tax on that sum. Okay? Now, when I do the example, I'll show you that. Residuary legacy, this covers the remainder of your estates besides your house. Now, let's, in bracket, providing it's not directed to your beneficiaries. If in the will that you've said that your house is going to go to your children directly, okay, then that will go to the children. If you haven't mentioned that, then it will fall into a main pot, residuary pot, okay, and then it will be shared according to your will, your wishes, and how you want to do that, or portion, or equal, or unequal. That is up to you. The other point, and that is very important because people overlook this, and what I call long stop, a disaster clause, calamity clause, okay? Now, this is basically what I'm trying to say. You are traveling with all your family, your beneficiaries, your grandchildren, your children, your wife, all of you are traveling together. And suddenly a disaster happened, earthquake, air crash, accident, whatever, and none of the beneficiaries in the will survives. Okay? Then what happened to your estate? Okay? So if you do not put or name reserved beneficiaries in your will, then the government will obviously step in if you haven't mentioned that, and they will use the law of intestacy, and they will decide who will get your shares. If they can't find a rightful owner, the Crown will get it. Okay? And it will cost your state quite a lot, because whatever search, whatever people they have to appoint to do that, they'll charge, and that will come off your state. So basically what I'm saying, it is useful and important to put a name, a reserved beneficiaries, so they could claim. You can put Masjid al-Umar, you can put any mosque you want. So at least you know that that will go to a charity, a registered charity, and at least you'll benefit in Akhirah. Why do you want to give it to the government? So reserve, and I do that quite often when I make wills, when I get my clients to put in a reserved beneficiary, and they can name their other people, friends, brothers or sisters, or they can, and quite a number of us name masjids. So you can do that, you see. And the other thing that you mentioned in your will is funeral wishes. Now, I don't want to elaborate more in terms of wills. When I do wills, when I look at funeral wishes, I don't elaborate much on the will, but I do sort of elaborate quite a lot on funerals in memorandum of wishes, which is more important, I think, for us according to Sharia will. So I'll cover that later on. But you can mention whatever you want to mention in your will, but I usually put that under memorandum of wishes and express your wishes, whatever your wishes may be, that you want to have following your death, okay? And how you want to be buried, where you want to be buried, and so forth. Other considerations is obviously keep your will safe. You've got to make sure that you know where your will is, or your executor should know where your wills are. Your beneficiaries, your children, if they should know where your wills are. You can store it. You can get it stored somewhere safely. They'll cost you. They may not cost you, whatever. But you need to make sure it is safe and it can be easily accessed. And I mentioned about memorandum of wishes, and this is quite important. And this is quite important. It is quite important to share your wills. Okay, when you make share your wills, particularly when you're in London, where the price of assets or houses is quite high, then obviously memorandum of wishes are very important. And it's basically what you're really doing with memorandum of wishes. You're expressing your wishes. That's what you're doing to your trustees. You're basically asking your trustees to do whatever you think that you would want it to do when you're alive. Okay? So it is up to them to do or not to do. Okay? You can't force them. So it's only expressing your wishes, and they don't need to abide by it. But if you name your own loved ones, your children, your wife, as your trustees in your will, then hopefully, inshallah, your beneficiaries not going to go against your wishes, and they will act upon your wishes, what you want to do. Now, inheritance tax, an important issue we're going to look at. Here, each person has an allowance, okay? A personal allowance or an allowance before inheritance tax is charged. Now, allowance that each person gets is 325,000 at the moment. But as I said, budget coming up, that's probably going to go down, you see? So at the moment, it's £325,000 each person gets. You do not need to be an owner of a house. You can be a rough sleep on the street, and that person has right to claim, or that state, if the person has anything, there's no inheritance tax to pay up to £325,000. So you do not need to be a house owner to have that allowance. Now, because each person gets the allowance of nil rate ban, husband, wife both get it, so therefore, in the event of first spouse passing away, and obviously you're not going to be able to pay the inheritance tax, or you're not going to pay inheritance tax because the wife is going to live in the property, or husband is going to continue to live in the property. So what you do, you fill in IHT form and you claim the transferable, your exemption, spousal transfer. Okay, that's what you claim. £325,000 between husband and wife. So on second death, okay, that will be added together. So in other words, on the second death, it's 325,000 times 2. That's what you will have to pay, 650,000. So that there will be no inheritance tax on the second death, not on the first death, up to £650,000 because you're now claiming the allowance of your deceased spouse. Okay. And here is additional resident nil rate ban, which is £175,000, which is the current rate, which has been frozen for the last 2-3 years. Okay. But there are certain conditions to it, and I'll come on to that in a minute. This is an additional threshold that the Tory government introduced in April 2017, okay? And this is basically providing that your property passes on to your direct descendant, and a direct descendant means children, grandchildren, great-grandchildren, stepchildren, okay? So if you look at family tree, it has to come down. It must not go sideways, and it must not go upward, right? Now, there's a difference here. According to Sharia, it may go upward, it may go sideways, okay? But to benefit from the additional threshold of £175,000 on top of your £325,000 allowance, which is tax-free, then between that, at the moment, it's £500,000 per person, okay? So between husband and wife, it's £1 million. So there is no inheritance tax to pay up to £1 million, subject to your property, your prime residential property. It must be a prime residential property. Let me qualify this, yeah? Goes to your direct descendant. Okay? Then you can claim up to £100,000, £1 million tax-free. So NRB is basically, as I said, this is an additional allowance I've introduced in addition to the NRB by the Tory government in April 2017, and its current threshold is 175,000, subject to meeting condition, which I've mentioned. It was supposed to be CPI linked, but the government has frozen this to April 2028, and I think they're going to keep it low in the budget that's coming through. I don't know what's going to happen there, but I doubt it if they will increase that. And this can only apply if the prime residential property is inherited, which I mentioned, by the direct descendant, grandchildren, children, whatever. Here, another condition is this. If your total joint asset, if your total joint asset between husband and wife, not just yours, okay, which includes the value of the property, any shares that you hold, any other assets you hold, okay, if all combined together is 2 million, okay, then the resident nil rate ban, which I'm showing the 175,000 with taper, okay, £1 for every £2, okay, up until you reach 2.3 million. So if a total assets between the husband and wife, joint assets, is more than 2.3 million, then the £175,000 is not eligible. You cannot claim. Your state cannot claim that. Okay? You exceeded the threshold. They see you as a wealthy person. Right? And therefore they think that you can afford to pay your inheritance tax. So they will not be eligible. They only bought this in 2017 because there was a big issues where I think two sisters brought up a case and they won. You see? And then the government introduced this resident nil rate ban because the sisters were claiming that their parents worked all their life, hard life, they paid the taxes, and then at the end of the day, why should they pay more inheritance tax? You see? So, and again, I'm going to come on to this in a minute, and how it affects the Sharia will. So, bear that in mind. Okay. So, inheritance tax basics. Okay. As I said, the resident nil rate ban transferable again, just as the nil rate ban between husband and wife. States over 2.3 million will not qualify for resident nil rate ban. Inheritance tax rate is obviously mentioned already a few times, it's 40%. Now, here, please make a note of this, okay? Discretionary trusts may not qualify for RNRB. Seek professional advice, okay? If you have a discretionary trust in your will, it might not qualify for the resident nil rate ban, okay? And I'll tell you why in a minute. And especially for Sharia will, I'll tell you how it affects. So, what are within the chargeable state? What state, what assets are considered in your chargeable state for inheritance tax? If you have made a gift in the last 7 years, okay, to anybody, right, to your children, to your wife, not to wife, but to anybody else that you made a gift to, your friends or whatever, okay, and if you made that gift, then if you made that gift within the 7 years of you passing away, then that needs to be shown in your inheritance tax return, IST. And there is a question they ask: has the deceased made a gift in the last 7 years? And the answer is yes. When was the gift made? And they have to say what date the gift was made. If the gift was made within the 3 years of the death, okay, then the 100% of that gift comes back as a calculation for inheritance tax on that deceased state, okay? So it is not tax-free, okay? It doesn't come. Anyway, so it does. Yeah. So after third year, okay, it reduces. It tapers, okay? So 80% or whatever it is, it's 60%, 40%. It goes down. At the end of the 7th year, that gift is totally free. It comes out of your state. Okay? So there is no inheritance tax to pay. You do not have to answer any question in the IST because that gift is before 7 years. So that's another thing that you have to bear in mind. So if you made a gift, then if you die within the 7 years, then it will come back to your state, and it will be chargeable state. Capital value of a qualifying interest in position. What do I mean by this? Let's take an example that you've got a buy-to-let property, and you are the owner of that property, the sole owner, okay, of that property. But what you've decided to direct the rental income to your son or your daughter. Okay? So they can actually, they will then do their tax return and declare that rental income, and they'll pay the tax on that income themselves. Okay? But you still hold the capital value of that state. So that capital value will come back to your state for calculation for inheritance tax. It doesn't go out because you still hold that on your name. Okay? So any gift of capital trust fund where your share has been retained, being a retention of benefit by the deceased. Another is an example for shares. Or you might have a share in a company or a private company, or shares, normal shares. And then what you decide to do, you decided to give the dividends to your children. And you might say, look, I direct my dividend to my children, but I'll keep the share. So the value of that share will come back to your state for inheritance tax calculation. It is not tax-free, okay? So here, what can you exempt or get a claim relief on your inheritance tax? Already mentioned, charitable gift. Any gift you make to charity, okay, whatever amount you give, providing that you've got a means to give that gift, okay, then that is tax-free. There's no inheritance tax to pay on that. Spousal exemption between husband and wife, there's no inheritance tax. agricultural and business property relief. Let me qualify. Agriculture is simple, farming issues, farming land, whatever it is, okay? Business property relief does not apply to buy-to-let property. Okay? Your buy-to-let property does not get an exempt from inheritance tax. But if you have a plant or machinery in an industrial property where you own it, and it's a manufacturing business, then you may be able to claim the relief exempt from the IHT paying that, because the business has to continue. It has to carry on. You see? A business cannot be shut down. So you might be able to claim the relief from the IHT, exempt from IHT, but providing it's a business, providing it's a manufacturing or other business, commercial business, and the business, the property has plant machinery, and that business needs to carry on, then there may be a business property relief, and there may be no inheritance tax to pay. Now we're going to look at the basic inheritance tax. Here it is. It's basically, if your state includes, if your state, this includes the family home, property investment, money, personal property, exceeds the nil rate band, which is more than 325,000 at the moment, on that IHT will be charged 40%, okay? After deducting any liabilities, relief, and exemption that may apply. Now, the liabilities is obviously your funeral and testamentary cost counts as a liability. So any cost that is your family has incurred for your burial can be claimed back as allowable expenses. Okay, but in Sharia, if you own somebody a money, then you have to pay for that. You have to pay for the zakat. You have to pay your fidya if you own that. That is not a recognized debt. Okay, a recognized debt is a contractual agreement between yourself and the lender. That is what we call a recognized debt. Yeah, mortgage, loan. Okay, anything that you've made a contract for that loan, then that is deductible. Okay, but if you own a friend and you've got no contract between your friend and yourself, you cannot claim it. It has to come out of your estate. Yeah, then Sharia rules, you've got to make sure that is first paid before it's distributed. Zakat is make sure it's paid before it's distributed. Pension is excluded. So if you have a private pension, it doesn't form part of your inheritance tax. It's taxed differently. So let's look at an example here. Okay, maximizing legacies. Let's one example, very important. We'll go through examples in a minute. The deceased has a estate of 1.1 million. Okay, so that's what the total asset, joint asset. I'm talking here joint asset, yeah, between husband and wife. Okay, so there's an asset of 1.1 million. Deceased here can claim the double nil rate ban, because obviously on the death, everything passes on to the surviving spouse. So there's double allowance to claim, 325,000 twice, 650,000 is to be claimed. Okay, and here, let's say that deceased has made between themselves that they want to donate 50,000 to a legacy, a registered charity, a masjid. Okay, so let's take that as an example, right? So let's look at the example how it works. Okay, here, if you look at it, total asset value is 1.1 million. Okay, this is all on second death, not on first death. Yeah. Nil rate ban. So you take away the nil rate ban from the 1.1, which is 650,000 twice 325. Then you take away, because here in the will you said that your property should go directly to your direct descendant, i.e., your children, grandchildren, stepchildren, whatever it may be. Therefore, your estate is eligible to claim £175,000. So on the second death, you're claiming twice that is £350,000. So if you take away the 1 million from 1.1 million, you're left with £100,000. Is that all right? Are you following me? Yep. Confused or? Okay. So you're left with £100,000. Okay. Now, if you haven't made a gift to the charity, then you would have paid 40% tax on that 100,000. But because you decided to give 50,000 to a charity or a masjid, whatever, that has to come off. So now your gift is made out, your taxable estate is now, £50,000, and the tax on inheritance tax on a £50,000 at 40% is £20,000. Okay, so that's the inheritance tax that you will pay. So your beneficiaries will now get £1,030,000. Okay, that will be paid to your beneficiaries. All right. Now another example, and I want you to consider this very carefully, because when we discuss Sharia wills, I want to discuss this. Okay. Here, we're looking at a property outside London. Okay, Lancashire, Yorkshire, Leicester, whatever, Warwickshire. The prime residential house value is 500,000. Okay, and the couple had a savings of 100,000. So between them, on the second death, the total assets is 600,000. Now they've got an allowance between them, 650,000. Okay, so they're under £50,000. Right? So there is no inheritance tax to pay here. Now, they don't even have to claim that resident nil rate ban of 175,000. It doesn't apply. Okay? Now, the reason I'm showing this is this, if you own a property in outside London, then the Islamic will 100% works. I would encourage and strongly recommend that you have an Islamic will in that part of the, well, it will work. You don't need any other memorandum of wishes or anything to go with it. Okay? Islamic will on its own will work. You know, a property can go to the trustees because the state value is not more than 650,000. Right? In accordance to Islamic will, the Sharia, in Sharia will, and Maulana, correct me if I'm wrong, Maulana Muhammad, but correct me if I'm wrong, in the Sharia will, you do not mention beneficiary's name. The reason you don't mention beneficiary's name because you do not know who is going to be alive at the time of your death. Right? And therefore, there are no beneficiaries listed in Sharia will. Okay? You have to say your estate will be distributed in accordance to Sharia, whatever the Sharia applies at the time. Okay? Now, for that reason, your estate has to first pass on to your trustees, your named trustees. They are the responsible people, the executive trustees, to make sure that they comply with the Sharia will and distribute your estate accordingly. Now, because your estate first passes on to your trustees, which means by law, your estate goes to them on their name. Now, your children may be the beneficiaries, they may be the trustees, your wife, your husband might be the trustees of your will, but in the eyes of the law, they are a different body. Okay? And what they'll see is the property is now passed on to a trustee, a body. Okay? And therefore, they are a different body. The property has not passed on to a direct descendant directly. And for that reason, you cannot claim £125,000. Are you saying what I'm trying to say? So if you make a will in property which has a value of less than £500,000, okay, I strongly recommend have Sharia will, nothing else. Fine, 100% solution, workable. If your assets here, you're exceeding your assets, London property values, 1.2, 1.3, 1.6 million. How are you going to maximize your tax saving? You know, if you have a discretionary will and you pass on your will directly to your trustees to decide, you will not get £175,000, full stop. So your state will lose £350,000 of allowance. So we have to be a bit creative, a bit prudent, and see how that can be worked out, yeah, in accordance to Sharia, well, in the best possible way. So let's look at the Sharia wills, the distribution of Sharia will. Now, the reason I'm showing this is quite important. Maulana, correct me if my calculation is wrong, but you know, when we look at Sharia wills, when I go to people, they think when they look at Sharia will and they want Sharia will, they're only looking at they want to make sure their estate passes on to their children. They don't look anything else. They don't look upward, they don't look downward, they don't look sideways, you know. But according to Sharia, if you have your parents who are living parents, Okay? Your parents have right to claim on your inheritance. You're living, yeah, if your parents are still alive. Now, if you look at an example here, right, this is a Sharia distribution example. A wife, a person has one wife, 2 sons, 3 daughters, mother and a father. Now, here, let's look at a Sharia distribution. The share of the percentage, how it will go, according to Sharia will, if you look at mother and father, the mother and father has much more share of that state than the daughter and the son and the wife. Now, when I mention that to the clients, they shock. Then they'll probably say, oh, my parents are healthy enough, they don't need money. But no, if you want Sharia will, you've got to have Sharia will, full stop. You can't go against the Sharia, you see. So basically, this is how the distribution will be made. If you've got mother and fathers alive, you've got 3 daughters, 2 sons, the wife, unfortunately, get 12.5%. The 3 daughters will get 7.74%. Sons will get 15.48%, and the father and the mother will get 16.67%. I've got, yeah, so, yeah, and here again, we're looking at wife, 2 sons, and again, you've got 1 daughter instead of 3. Again, you will look at it, the mother and the father get less share than the sons here because the daughters, there's only 1 daughter and not 2 daughters, so the other 2 daughters' share has been divided between the thing. Here, husband dies, okay? Husband dies, leaving his asset to wife, 2 sons and 2 daughters. So if you look at it, the wife, obviously the wife gets 12.5 and the 2 sons get the, so there's no living parents here, and the sons get 29.16% each, and the daughter get 15.48% each. And here, the wife dies. This is Maulana, I think this is what you're saying. Here, the wife dies. Okay, wife has her asset. If you put your property as a tenant in common, the rightful owner is the wife. Okay, because that's her property now. Okay, so the wife dies, leaving her assets. She has a husband, 2 sons, and 2 daughters. So the husband will get 25%, while both sons will get 25% each, and both daughters will get 12.5%. So you can see if the wife dies, and her asset will go according to and the husband gets more than the wife. So I hope I haven't confused you. I want you to understand the concept. And if you make Islamic will, then it's important that you make Islamic will according to Sharia. Islamic will need to leave the assets distribution to point trust. We mentioned that, because obviously we do not know who's going to be alive at the time. Sharia wills are 100% accepted by UK, England, and Wales law. Okay, there's no reason they don't accept. They do accept it, but it is seen as a discretionary trust will. Okay, it's because you don't have, you don't list beneficiaries in it. You have to leave the decision at the discretion of the trustees. So they're accepted, not an issue, not a problem. Okay. However, would it be tax efficient? That's the other thing that we need to answer. That's what we said. I've said if it's your property is in out of London, 100%. Accepted, not a problem. Property value more than 650,000, you may want to consider and see best way of making Sharia will. If a married couple lives in the area where the house value exceeds 650, we've said that, no issue, Sharia will is perfect. If total asset exceeds 650, is it helpful to consider how you could maximize your tax saving? Something that you need to consider and need to look at. So, as I've already mentioned, that Sharia wills are discretionary trust-based will. Okay, you have to give the discretionary power to the trustees to share your wills according to the scenario of your family or situation at the time of your death, because it's basically a thing. And obviously they can look at the cost of paying your zakat or whatever that needs to be paid, and your burial cost and whatever there. Based on the above scenario, if your house is valued more than 650,000 and you want to claim the resident mill rate ban by directing your house to your children, this will not happen unless we do some form of trust or some form of ways of working that out. And I've covered this already, that property will first transfer to the trustees of the discretionary trust before it goes on to the beneficiaries. That's according to Sharia rules. But there are ways that we can maximize tax saving, but not having a discretionary trust for prime residential property, which has a value of over 650. So basically, what I'm saying, if you want to try and maximize this tax saving, if you want to try and cover the £175,000 in addition to 325, then we've got to look at how best it can be done. And I usually try and do that through what we call either a trust or memorandum of wishes. And that memorandum of wishes, which obviously goes along with your will, that will be a Sharia-based, in a sense, similar to will. Okay? So you will be expressing your wishes, your expressions, whatever you call it, yeah, according to Sharia. So now what we're looking at, you've got a will, and in the will now we're directing the property to your children, okay? And why are we doing it? Because so you can claim the additional threshold, right? So the will do what needs to be done to deal with your probate and to do with your inland revenue, to deal with your inheritance tax, okay? That's what the will do. You do not have to submit, you do not have to show your memorandum of wishes to anybody, not even the government agencies, not even the Inland Revenue, not even the probate office, yeah? And as I said, it is not a legal document, okay? It is only signed by yourself. You are only expressing your wishes to your trustees. All you're saying, dear my beloved trustees, I have left, I departed this world, and everything will be worded Islamically, okay? I want you to consider my estate and distribute it according to Sharia, okay? But first of all, you want to make sure that my debt is paid off, okay? If my zakat is outstanding, please pay that off. If I have fidya to pay, please pay that off, okay? If I have taken a loan and that loan is owed to somebody and that person can prove I owe that money, you need to pay that off, okay? Those are not deductible according to British law, okay? So now you're saying to the trustees, deal with my estate according to my will, pay off any inheritance tax that needs to be paid, if there are inheritance tax to be paid, and once you get the clearance from the Inland Revenue, there are no tax and everything is clear, you as a trustees would get that money. I will then want you to sit together as my trustees, and you're my beloved trustees, you're my children, right? And please consult the Maulana, consult the Mufti, and see how best this can be distributed.
If the children are not pious, what will happen? If the children are not pious...
Well, then unfortunately I can't answer that, Maulana, because that's the issue that family has to deal with. I have that problem, but unfortunately this is something that family has to deal with, And maybe Maulana can step in and guide that children, bring straight path, inshallah, you see. But here it's basically now, if you trust your family, if you do trust, you must make sure that you have trust in your family and your children, yeah? If you do not, if you have a doubt, then you may want to bring somebody else that you can trust. Okay? But I usually say to people, try and keep the family affairs within your families itself. Why do you want to bring outside influence to deal with your affairs, yeah? But it's up to you, You can appoint a professional trustees. No, there's no reason why you can't. You can go and appoint a solicitor, you can appoint an accountant, you can appoint a Maulana as your trustee. It's not a problem, you can do that, yeah? You see? And then you will have, then the decision will be based on the vote, right? And if majority decide to do whatever they want to do, then your wishes may not be carried out. Okay? So you need to make sure that you do trust your trustees and they are reliable people. Mental capacity is there, right? So it's quite important. So what we need to do here is that we do a will, we try and make this is basically, I'm talking about with the people with the value of higher assets, yeah? I'm not talking about people with asset less than 650. I'm just saying to them, we'll make 100% Sharia will. No problem, you see. But if you've got an asset, which obviously, why do you want to pay 175,000 extra between the husband and wife, 350,000 to the crown? Why should your state lose that benefit? Okay. So here we will then look at the memorandum of wishes, and the memorandum of wishes will then be implemented, and hopefully your trustees will abide by your wishes, and hopefully they will do what you want to do. So here I'm basically giving an example again. Sharia wills 100% works anywhere outside London where the value is less than £650,000. Not a problem, you could do it. So that's basically on inheritance tax. That's basically, I can't give you much on the Sharia. I'm not a qualified alim to talk much about Sharia. If there are issues on Sharia wills, talk to alim, talk to Maulanas, and I'm sure they'll be able to explain to you. Okay? So that's basically on what I want to say inheritance tax. I hope I made my presentation as simple as possible and you're able to understand. And I just wanted to make sure that I pitch it at a level that everybody understands, because otherwise I get sometimes people say it's just gone above our head. I had a couple of calls came back from people that went to a presentation somewhere, and they said, please explain whatever that was told. I did not understand, so could you please tell me how this applies?
I think one point that if you make a charitable donation of more than 10% of your estate, then the Indian tax on the rest comes down from 40% to 36%.
36%. Yeah, it comes down.
Suppose someone can up to 33%.
Yeah, they can. Yes, I mean, they can make what I mean. People, I think. Let me just give you one very good last example. Which obviously quite important. Sometimes parents transfers the property over to son's or daughter's name. Okay, they think they're going to save inheritance tax by doing that, and they think they're going to survive for 7 years, and after 7 years, then they won't pay anything. That is wrong. Totally wrong. Okay, why is it wrong? If the parents are going to continue to live in that property and are going to benefit and have the enjoyment of that property, okay, you cannot transfer. You have to move out of that property somewhere else, and that property has to be totally gifted to your children. They are the rightful owner, okay? Or you can live in that property as long as you want. You will have to pay market rent to your children, and your children will have to then submit a tax return to Inland Revenue, okay, saying that the tax has been rental income has been collected, and they have to pay tax. Yeah, okay. If that doesn't happen, and the parents continue to live in that property without paying rental income, on death, that property will come back onto that person's estate for calculation. It is not inheritance tax free. It can only be inheritance tax free if you move out of the property or you pay market rent value. Okay? So I just want to say that because I do get this quite often from our community. Well, I mean, there is no inheritance tax on or capital gain tax on your residential property.
No, I'm saying instead of gifting the property to your children, if you sell it to them, is that an aspect?
Well, as long as you charge, as long as they pay the market value, and there's a receipt for it, okay, and then they let you allowed to stay, because there's a transactions of money. There's a transferable asset. You've got the receipt to prove it. And when it registers in land registry, it will mention, the value of the property at the time of transfer. Okay, and obviously the solicitor will have that receipt, so that's fine. And then it's up to the children to say, yes, you can continue to live in that property. We won't charge you. That's the choice of that. Yeah. So anyway, what I want, sorry. No. What happened is this. When you have a property which is registered as a tenant in common between husband and wife, I'm not sure if I'm answering your question, but I hope I am. And if on the first death, the husband's share of the property, say the husband passes away, his share of the property will then go to the children. Okay, so now the property, that 50% of the share is owned by the children, and the other 50% is owned by the surviving spouse. Okay? Now what we're looking here is that we're basically having a will. In the will, the husband would say, or wife would say, my spouse will have a right to live in my property. The property will, that my children can only have the property for themselves after my wife passes away. She has the right to occupy until such time she leaves, or until such time she wants to sell, okay, or she wants to downsize the property. You see?
My question was that in terms of the land registry, the property was in the name of the man, the wife, and his children.
Why would it be children? The wife, if the husband passes away, his name is removed.
That's how the property is registered as land registry.
No. Well, I mean, and then if the property is registered and with the children's name on it, okay, as a joint owners and not as a tenant in common, okay, then the property will automatically pass on to the joint survivors, who have a number of equal shares.
So
right? It continues within the family. Okay? Right. Is that all right, yeah?
And then there's no inheritance tax paid until the last survivor.
Until the last survivors, yeah. It goes on to the surviving spouse, you see, surviving people. Lasting power of attorney. Very quickly, I don't want to, sort of elaborate a lot on this, but it's important to know. People don't think about this. People must consider lasting power of attorney. Very important now. Very, very important. In this stone age. Very important. So, LPA is a lasting power of attorney. LPA is a legal document which is created by what we call the donor, which is you, the person who makes the power of attorney. The donor can appoint one or more than one attorney. Okay, it's just like having power. You can have more than one attorney, up to say 4, up to 3, 2, whatever you want to do, and that they will be called your attorney. And the attorney will have power to help make a decision for the donor. Okay, while the donor is alive. Okay, so while the donor is alive, the attorney can act for them just as the person will act. And LPA gives more control over what happens to the donors if the donor has an accident, illness, and cannot make his or her own decision. In other words, lacks of capacity. Basically, what happens is, if you lose your mental capacity, right, you cannot make lasting power of attorney after that. You do not have the capacity to make lasting power of attorney. Stops. Okay? Now, there may be instances where your family wants to sell the property for whatever reason. They cannot sell the property because you do not have the capacity to agree to the sale. So what they have to do, they have to get a court order, which may happen, depends on the judgment, may not happen. But the process and the cost will be quite a lot. Okay? But if you have made your power of attorney while you're alive, while you had a mental capacity, then at least they can act for you just as you would act for yourself when you had the mental capacity. Right? So it's quite important. So this is where the donor must be 18, so whoever makes the LPA, they must be over the age of 18 and able to make their own decision as a donor, and can appoint the thing. There are two types of LPAs, okay? One is what we call the health and welfare LPA. This is to do with your medical and your care, okay? So for, anything to do with your medical, your care, health and welfare LPA will take that over. So, for example, you're in hospital, you need a treatment, you need to speak to the consultant or the surgeon, and they need to make a vital decision for you, okay? If you have an LPA, health and welfare, then your attorney can make that decision for you just as you would do for yourself. As I give an example, if a girl who's actually in a coma and now having rehab, she can't, she wouldn't be able to make LPA now until she comes out and she has a fitness test done. Yeah. So, if you happen to go into hospital and there's an issue, say life sustenance machines, yeah, what happens? At the moment, the NH might, as a courtesy, consult the family, but legally they don't have to. As a courtesy, they'll do it, but not legally. But if you've got a power of attorney, then it's a legal document. They'll have to consult you, and you can make that decision for that patient, okay, just as that person will make decision for him or herself. Yeah. So if you want, if you want to make sure that they don't switch the machine off, you can speak as an attorney. Okay. So if you've got health and welfare, if that can be done. Anything to do with care, anything to do with medical. The other one, which is property and financial. This is another LPA, which there's two types of LPA: property and financial, and this only deals with your property and your financial issues. Yeah, and I give you an example. For just now earlier on, so you may lose a capacity, and at the time that your family might want to sell the property, might want to sell assets. Yeah, but they can't do it. You haven't got a capacity. Yeah, but if you've made a property and financial LPA, at least they can do that. So LPA gives an attorney the power to make decisions about the things like your daily routine, for example, washing, dressing, eating, that's the health and welfare. Your medical care, health and welfare, LPA. Moving into care home, they can decide which care home, what they should do, how they should treat you, dietary requirement, whatever. You can talk for your attorney. Life sustenance treatment, we mentioned that earlier on. And it can only be used when you're unable to make your own decisions. So, you lose capacity and you can't use, you're not there, they can do that. It cannot be used after death. After that, it stops. Yeah? Once you die, the power of attorney ends. That finishes. Uses LPA to give attorney power to make decisions about your money and property for you, for example. So if you have a property and financial, we mentioned already, they can do anything they want to do. They can use your bank account, transaction, pay, bills, whatever that you need. It needs to be done in order to carry on with your life. Yeah. Managing bank account, building society, they can do that. Paying bills, for example, collect benefit, pensions, selling your homes. It can be used as soon as, you have to register your LPA, which is called a government office of public guardian, okay? And they have to validate, and it takes up to, at the moment, takes about 4 months to register an LPA. Out of that 4 months, the 4 weeks is what they do is they have to issue notice to the attorneys and to whoever they think they need to do. So it takes up to about 4 months. Yeah, in the past, within 8 weeks, we had this, but now it takes about 4 months. Okay, long ways going to. And not only that, October, they are going to change the way that they process the LPAs. Yeah, and it's going to be more digitalized, which I understand. I haven't actually seen everything that's coming through, but I think there's going to be changes. And they may keep the paper format, but there are going to be changes. And if they go into a digitalized way, some of the elderly person might find it difficult. Okay, so I really don't know what they're going to bring at the moment. The fees for the LPA, this is the fees that you pay for each power is £82. So each LPA will cost you to register. That's the money that you pay to the Office of Public Guardian. You might be eligible for an exemption. So if you're receiving benefits, okay, not state pension, okay, it has to be a benefit that is qualified benefit, employment allowance and housing benefit and things like that, then you may get an exemption or you may get a reduction. But state pensions are not covered. So that's basically just on the lasting power of attorney. And I just wanted to highlight that it's very important that think about your will, make your will, but at the same time, do also think about what would happen in case you lose your mental capacity. What would happen to your state? What would happen to your health? So lasting power of attorney is something that you really need to take. Anyway, that's basically it. And if anybody has any question, I'm here for a while. My contact detail is there. You can contact anybody else that is not an issue, a problem that you want to. But my recommendation is if you haven't made a will, and when I looked at it here, when I saw the raise of hand, there's only about 5 people that actually got a will, which is quite shocking. I would have thought at least 50% would have the will. But the survey, which obviously we saw earlier on, Canada Life, say that in UK, 50% adults don't have will. So Maulana has already mentioned, Shoaib, the importance of having a will. And I don't want to go more on it, but yeah. Sorry. You can have as much as up to 4, maximum. Okay. Sorry. And I didn't get the motto.
If you have more than one, so let's say you have 3 attorneys, do they act individually or
no, it's up to you. They can act severely or jointly. That's up to you. They can act on their own, or they can act, they must act together. Choice is yours.
You have to list that on the LPA?
Yeah, they have to be. That has to be filled in. Okay? Jointly or severely.
So come back to the, naming the
If you give your property, your residential property to your children, okay, and you continue to live in that property, then you have to pay the rent. Whatever proportion you give, then you have to pay the rent on that proportion. Yeah, and share the bills and all that. Okay?
Right, so scenario is property was purchased in father and daughter's name. Mother passed away. Later, father passed away. Daughter automatically inherits property.
If it's a joint ownership, okay, automatically yes.
Yeah, and then the nil rate is applied twice.
Yeah, if providing the property was owned by husband and wife together before, and okay.
So the property was purchased in daughter and father's name together.
Yeah, but see,
Husband and wife live.
yeah, the only 325,000 of the assets that a mother has would be able to claim. Yeah, legally the mother did not own the property.
No.
Okay, but the father's, and it's a joint ownership, that the property will pass on to the surviving spouse or surviving person, which is the daughter. Okay, so the daughter becomes the legal owner of that property. It doesn't fall into father's estate. Okay, so therefore they'll lose out. You see? Anyway, I mean, it's I've taken a lot of time. I see that people are starting moving out. If you got my detail there, you can actually contact me through the mosque or through name there.
People buy things husband and wife together, but actually the wife doesn't contribute anything. They just put the wife's name for the sake of it.
For this, I mean, basically what it is.
But they say it belongs to the husband totally as far as the Sharia is concerned. So there's a lot of, as a memorandum, which is very, very important.
It's important, yeah. Maulana said the other thing is this: if you put your wife's name onto it, yeah, then the wife actually owns an asset, yeah, and therefore her allowances, she gets an allowance of 325.
See, on our situation, they done some kind of deed of trust. Yeah, so the father, he declared that the wife had ownership, although she wasn't registered. Yeah, so
Yeah, I mean, if there's some kind of document, you have to seek legal advice, brother. You see, to be honest with you,
no, it's done.
Yeah.
We just use
Yeah.
it as an example.
It's just
So they were able to claim.
sure. Both, yeah. I mean, it's there. It's legal documents there to show the evidence are there. Then that's a different issue. See. Okay, Jazakallah khair, and Alhamdulillah for Jazakallah for listening, and hope inshallah makes it easy for you and for me and for me inshallah.